group financial statement. On May 16, Rakuya acquired 52% of the ordinary shares of Soma Limited, a foreign subsidiary. The retained earnings of Soma Limited on these dates were 220 million. The Bluetooth device is ready to pair. Of the identified net
Struggling.
Soma Limited.
Our reader, can you please raise your voice a bit? I'm struggling hearing you, please.
Okay. May 2016, Rakuya acquired 52% of the ordinary shares of Soma Limited, a foreign subsidiary. The retained earnings of Soma Limited on these dates were 220 million DFAs. The fair value of the identifiable net assets of Soma Limited on May 1st, 2016 was 990 million DFAs. The excess of the fair value over the net assets of Soma is due to an increase in the value of the non-depreciable land. Rakuya PLC wishes to use the full good method to consolidate the financial statement of Soma. The fair value of the non-controlling interest in Soma Limited at May 1st, 2016 was 500 million DFAs. Soma Limited is located in Tom, a small country in West Africa, and operates a mine. The income of Soma Limited
It's like your network is serious. We can't even hear you again. Or is it my network?
It's his network.
We can hear you. It's network.
Oh.
Let me continue from where he stopped.
All right, no problem, Amro.
Soma Limited is located in Tome, a small country in West Africa, and operates a mine. The income of Soma Limited is denominated and settled in DFAs. The output of the mine is routinely traded in DFAs, and its price is determined initially by local supply and demand. Soma Limited pays 30% of its costs and expenses in Naira, with the remainder being incurred locally and settled in DFAs. Soma's management has a considerable degree of authority and autonomy in carrying out the operation of Soma Limited, and is not dependent upon group companies for financial support. Either the DFAs or Naira should be taken as the functional currency of Soma Limited. There have been no issue of ordinary shares and no impairment of goodwill since acquisition. Number 2, also on May 1st, 2016, Rakuya PLC had acquired 70% of the equity interest of Futa Limited. The purchase consideration amounted to 226 million, which Rakuya PLC paid through bank transfer in compliance with the cashless policy of the federal government of Nigeria. The fair value of the identifiable net asset recognized by Futa Limited was 240 million naira. Net assets of Futa Limited at May 1st, 2016 included a brand which had a fair value of 8 million naira. This had not been recognized in the financial statement of Futa Limited. The brand is estimated to have a useful life of 4 years. The retained earnings of Futa Limited were 98 million naira, and other components of equity were 6 million naira at the date of acquisition. The remaining excess of the fair value of the net asset is due to an increase in the value of non-depreciable land. Rafuya PLC wishes to use the pool goodwill method in consolidating the financial statement of this subsidiary. The fair value of the non-controlling interest in Futa Limited was 92 million naira on May 1st, 2016. There have been no issue of ordinary shares since acquisition, and goodwill on acquisition is not impaired. Number 3, the following exchange rates are relevant for the preparation of the financial statement. May 1st, 2016, Depas to Naira 3:1. April 30th, 2017, 2.5:1. Average for the year to April 30th, 2017, 2.9:1. Requirement A. Advise the finance controller on what currency should be taken as the functional currency of Soma Limited, applying the principle set out in IS 21, the effect of changes in foreign exchange rates. B. Prepare a consolidated statement of financial position of Rafuya Group as at April 30th, 2017, in accordance with International Financial Reporting Standard, IFRS. Show all workings.
All right. Thanks so much for that. And I know we started in parts answering this question. The only thing is that my students will not attempt. So let's look at the question. The last week I did some translation first of the financial statement. Okay. Hoping that will help us. So let me start by the group structure. We are talking of how many companies here? We have Rapuya, right?
Yes, sir.
Owns Puta. And then what? Soma. Are you together? What's the percentage of owning in Soma? Sorry, I'm yawning. If they say I'm not tired, I'm only lying. 52%. Arapuya
Soma.
had acquired 70% of what? So either way, it still has control, right?
Yes.
Our reporting date is when?
April 30th. 30th April.
But if you look at acquisition of Puta, what was that? 1st of May.
2016.
Okay, so 2016, right?
Yes.
That's acquisition at the beginning of the year. No be sure. So I think it's the same for Soma as well.
So you're not sharing your
Can you see my screen or you are not?
No, we are not seeing it.
You can see it.
We can see it too.
If others are seeing it and you are not seeing it,
it's clear enough.
Network from your end. So I can advise you just click out and click in again. Join the group. All right. So the next thing for me is to translate the financial statement. So I'm just doing back what I did the last class. Because Soma is in another country with another currency, right? Differs. But we need to convert it to Naira. Are we together? All right. So let's look at items in the asset side. Or we have property, plant, and equipment. No be so. Are we together?
Yes, sir.
We have PPE. How much is Soma? 7 what?
But sir, we are not seeing the top of the what they are writing. I don't know. I can only see the 760.
Can you see this? Can you see the star I did?
No, sir.
Any other person?
It's
Can
only
anybody see?
Yes, sir.
I can see it.
You can see it,
Some
sir.
financial statements.
can see it.
So it must be a network. Because others can see. It's still my screen.
Oh, let me log in and log in. Log out and log in again.
Oh, okay. Current assets. Or is it raining somewhere there?
Yes. It's really everywhere.
That's which state in Nigeria?
Look, Osun State. Ile-Ife.
It's okay. It's as good as we have Nigeria in this class. Interesting.
Oh my God.
All right. So what's the exchange rate of differs as at April 30th, 2017? Because these are the value of this asset as at the end of that year. It's 2.5, right?
Yes.
So we are converting it, their final values of the asset at the end of the year. So we use the exchange rate applicable at that time. So 2.5 differs to Naira. So how much will this be in Naira? That would be 760 divided by 2.5. That should be 30.
304.
100 divided by 2.5. That should be 25. Or that should be 40. That's 2.5, yeah. And then 660 divided by 2.5. That can give us 264, right? So 264 plus 40 plus 304. That gives us 608. Okay. Now, we have used the exchange rate at the last date. That's just the only reasonable thing to use anyway when it comes to assets. All right. Even if I'm not quoting specifically 21, as much as those items are concerned. All right. Because they constitute assets or items that will be adjusted over time. Let me do the total for this. This is 1520. Okay. Now let's look at the equity and liability side. All right. Person that could not see the top of my screen. Can you see it now?
Yes, sir. Yes, sir.
It's better, right?
Yes, sir.
Good. Because if you cannot see the top of my screen, I also cannot even see your screen. So manage it. Retained earnings, I explained that retained earnings will come in two forms. We have the pre-acquisition, right? And then we have also the post-acquisition. The post-acquisition, I'm only writing this for the sake of the class, will be our balancing what? Will be our balancing figure. Are you with me?
Yes, sir.
We have non-current liabilities. And I feel and I think we have to have current liabilities. You see that as much as this question is concerned, I did not pick the investment in subsidiary, okay, because they don't have it under SOMA. Are we together? So I'm only picking items in SOMA, no be so. All right. So share capital is 400, but note share capital has always been constant since the beginning of that financial year. So it will be exchanged at the rate of 3.0. Of the pre-acquisition retained earning, that's 220 as per question. Additional information 1. So that when you say 600 minus 220, it gives us a balance of what? 380. Are you with me?
Yes, sir.
Then non-current liability, we have 320. And then current liability, you have what? 200. Okay. So determining the rate at which the non-current liability is an adjusting figure that has been adjusted over the years or during the financial year. So we use the closing value. For the pre-acquisition, that's our 3.0. And like I said, this will be the what? Balancing figure. So let's get the values in Naira. 400 divided by 3. That gives us what? 133.33. Let me pick the 133. 220 divided by 3. That gives us a 73.
0.3.
And let me keep the 0.3. 320 divided by 2.5. That's a 128. And then 200 divided by 2.5 is 80. We should note that the summation of this gave us how much? 1,520 as well. So it means that this also must be equals to what we got here, right? It must be equals to 608. So the 608 will be the difference between all of this. The difference between all of this and 608. Are we together?
Please, can you repeat that?
That is, the value here will be summation of 133 plus 73 plus 128 plus 80 take it out from 608. That will be the value we have here, which is what? 194. That's why I said it is the balancing figure. Okay. Normally, the post-acquisition retained earnings, that value is coming from where? Where is it coming from? The value is coming from the income statement. Are we together? Hello?
Hi.
Yeah, the value is coming from the income statement. And the meaning is that if it's coming from the income statement, it does also means that it should have been as the average value.
Yes.
But implicit also is that even if you don't get the real value using the average value, there would have been some level of exchange gain or loss. In this case, maybe exchange gain that must have been added into it. That always be the balancing figure. Abiba, can you go ahead with your question or
Hello, good evening.
any clarification?
Hello. Sorry, please, how did you get the 608?
Well, the total asset must be equal to the total equity and liability. So this must also be the same. In as much it just, what's the accounting equation?
Asset equal to
Asset equals to what?
Liability and capital.
Equity plus liability.
Some of you don't know accounting equation.
Asset equals to equity
Yeah,
plus
good, though.
liability.
We need to ask you, how did you pass QC? Or how are you even calling yourself an accountant? Except for, anyway, to be emphatic, except for people who work in maybe firms, that is big accounting firms, and maybe top multinational. Most of these standards and the like, you will not do it, or you will not even do it in real life. That it is just only the basic accounting double entry principle. Don't say you've forgotten accounting equation. All right. So let's continue. I hope I've been able to answer Abiba's question. So this is the equity and liability side. All right. So let's start. I haven't translated this. I think we are fine. The only thing we need to sort out is our other workings. Are we together?
Sure.
You have a question?
No, sir.
All right, good. So, okay. I'm trying to think, how do I want to present? Okay. So that it will not be a major deviation, but let's go ahead. Fair value of subsidiaries net assets. All right. Because I know in the question we are given, are you with me?
Yes, sir.
So let's pick acquisition date, our reporting date. Are you together?
Sure.
Try to see at what point should I do the exchange rate for. Okay. All right. Okay. So let me do it this way. so that I can predetermine. I don't want my workings to be lengthy. At the same time, all right, so let's say at acquisition date, are we together? We look at the exchange rate and then the Naira value. And then we have our reporting date, okay? Exchange rate. And then our Naira what? Value. All right. So, let's go ahead. Our OSC at acquisition date, what's the value? This is SOMA. What's our OSC at acquisition? 400, right?
Yes.
Exchange at 3.0. No be so.
So
Reporting 400, right? At acquisition date, what was our retained earnings?
220.
Yeah?
220.
220. At reporting date, what was our retained earnings?
400, 600 from the question.
600, right?
Yes, from the question.
But that will not have a specific value to us. I will explain anyway. Are we together?
Yes, sir.
And you should even know that this will be the both value, because each of it are valued separately. Okay. Well, let's continue. Other components of equity, we don't have any, right? We are told that the fair value of the identifiable net asset of Soma Limited was how much? How much? 900 million DFAs. If you read additional information 1.
990.
990. What caused that difference? The difference is due to what?
Increase in the value of the non-depreciable land.
Increase in the value of
Fair
what?
value adjustment.
Non-depreciable land. Okay. Fair value adjustment. So how much is that difference? 620 minus 990. That's what? 370.
So I'm not getting you. Like,
have I done anything different from what I've done before?
You're not a magician.
Eh?
Maybe you're not a magician.
I have not done anything different though. And you need to try and get me. We are only reading additional information 1, all right? Anyway, you might not get me. Sorry for that, but we are reading additional information 1. Okay. Because the way you are not getting me, myself, I'm not getting myself. I'm tired. But we need to hold our thought. On May 1, 2020.
Sir, this translation we are doing for the second time is confusing.
It's not, don't worry. It's just the same thing I did up here.
Now, I thought since we have translated already, we would have just brought the translated figures to fix into the fair value of the net asset of the subsidiary.
Yeah, we could do that. What I actually felt like not doing, I don't want to create a much deviation from what we have done. Okay? That is the pattern in which we've done this fair value of subsidiary net assets. I just want it to be as such. So you look at it, just use the figure that is there, but all this translation is practically the same thing you have here. I don't know if you get my point. Hello?
Yes, sir.
It's practically not different anyway. So just the same value you have there, but see how it works. That's all. That's all I'm trying to do.
But I don't know, sir. This motor is like you are trying to arrive at is this exchange gain or loss? I don't know.
Yeah, at the point in time we arrive at exchange gain or losses.
Yes. Okay.
So let's move forward. So the depreciable land is how much?
370.
370. So this 370 was as at when? After acquisition, right?
Yes,
Yes.
sir.
1st of May,
Yes.
2016. And as at that time, what would be the value of the land in Naira? It will be exchanged at the rate of how much?
3 Naira.
And what would be the exchange rate? That would be
2 to 1.
Okay, 3 to 1. Good. Are you with me? As at reporting date, the value would still be 370 because it's a non-depreciable land, right?
Yes, sir.
Are you with me? But what would be the exchange rate as at reporting date?
April 30, which is
will be the average for the year.
2.5.
That would be what? 2.5.
2.5.
Are you with me? Are we together?
Yes.
Are we making some sense there, right?
Yes, sir.
Okay, good. So now let's convert this. I think it's the same thing we've done before. That would be 133. This would be 73.
123. The next one.
Okay.
I think it's 119, Abi.
It should be what?
123.
Okay. That's 370 divided by 3. Okay, 123. So 400 divided by 3 here will still be 133. The value of this 600 will be the summation of the two you have here. Are you getting me?
But sorry, sir. For this, that's for the fair value adjustment. We say the 370. We are going to use the rate for the acquisition, which is 3.1. I don't know. You use 3.0.
You said
the fair value adjustment. We said we are going to use the exchange rate at the acquisition date, Abi, of which is 3.1.
3:1.
Yeah.
But that's not 3.1. 3:1 means what? 3 differs to what? 1 naira.
1 naira.
Are you with me?
Yes.
Yes.
Yep.
Okay, and 370 divided by 2.5, that gives us what? 140 what? 148.
Please, I don't understand the 267.
This 267, this value of 600, it's from here. Remember that this 600 was divided into 2. Right? So one leg of it is valued at 73. The other leg is valued as 194. Okay. Are you with me?
But pre-acquisition, why are we adding it to post-acquisition?
What is the value of retained earnings at your reporting date as per
600.
your statement? It's 600.
600, yes.
Yes, sir.
Okay. but that 600 is made up of two different values. Are we together?
Yes, sir.
Okay.
It is made up of a value which was at pre-acquisition and another value which was at the post-acquisition period.
Yes, sir.
Are you with me?
Yes.
That's the value. So
why do
that's
you
why
have the 267?
exactly. So we just need to add up that these two figures, 73 plus 194.
So where is the 267 coming from?
73 plus 194. Or am I not? 73 plus 194. The 220 element and then the 380 element. Are you with me?
Yes, sir.
Why I'm doing it this way, so that it can be easy for us to pick our, what do you call it, our share of PAR, post-acquisition retained earnings.
Yes.
So, because if I just go straight away, I don't need to solve all of this. I've already been given the value of my subsidiaries net assets. Are we together? So I'm not gaining anything from this. And then this is what 329. Are we together? So what's the value of post-acquisition retained earnings in Naira? $548 minus what? 329. Are we together? That gives me what?
219.
219. So in essence, I've brought in the effect of the exchange gain here, because what is happening in land is an exchange gain. Are we together? Which is going to the consolidated retained earnings. And what is happening here, 267 and 73 is post-acquisition retained what? Retained earnings. Are we together? Okay. Please try and be with me.
Please don't take it away yet. 548.
So let's look at goodwill, right?
Okay, sir. Thank you.
You're welcome.
So, sir, looking at this fair value of the net asset of Soma, we can decide to ignore the translation. And
yeah, you can choose to anyway. You can choose to, but one thing is, I think, even though as much as I've not even looked at the question in details anyway, at every point in time, the best thing is go ahead step by step with the translation. Because you may not be sure, or because either way, what you need to do is you must make it at the same currency. Are you with me?
Yes, sir.
Either way, it must be at the same currency. That's just one thing which is setting. You want to do it that way or you don't, you must make it at the same currency. Because there are some you are given, okay, let's look at this goodwill now. How much was the parent consideration? How much is the parent consideration?
Is 184.
184. 184 what?
Evers.
184
naira.
184 naira. But how much is NCI?
500.
500.
How much is 500
DEFAS.
So two separate currency, right?
Yes.
So you must ultimately show how you move from one to another. Are you getting me? And remember, examiner intentionally said show all what?
Workings.
Workings. Are we together? So either way, you can try and just be explicit as much as possible. So that would be 184 times 3, because that was the value as at the time the purchase was made, right? 184 times 3 will give us what? 552, right? And we can now say NCI at what? Fair value. How much? 500, right? Even though they will be converted back at the rate at acquisition date. This will still give us the 184. And then 500 divided by 3 will give us what? 167, right? That will give us 1,000 and what? 52. And this will give us how much? 184 plus 167. That'll give us 351, right?
Yes, sir.
Are you with me?
Yes, sir.
All right. So we can now look at fair value of subsidiaries net assets. How much is it in differs? 990, right?
Yes.
But how much is it in Naira? 3 what?
329.
329.
329, okay. I'm sure, somewhere here we must have done some approximation, because if you divide it by 3, it should give you about 330, but it doesn't matter. Even though the gap is, the difference is not significant. Are you getting me?
I'm raising my hand though.
Go ahead.
Yes, I have 2 questions. The
2
first one is
questions,
that
only you. Okay.
the first question is that since we have multiplied that 184 times 3, and we got the difference. Do you still need to go ahead and do we need to calculate in difference, or we just need to go ahead with the Naira alone? Since we know that it's 184 already.
Ultimately, you still need the value in Naira, because when you are consolidating, you consolidate it in what?
In
Naira.
Naira.
Yeah, the parents.
You are consolidating the parent currency.
Yes, currency.
Okay. So we still need the difference too.
And because either way, you have to bring NCI back to what? Naira. Right? Are you with me?
Yes.
You have to convert NCI was not given to you in NCI was not given to you in what? In Naira. Are we together? It was given to us in differs, right? So even if you say you did not put this one, you just put this one, 184, no wahala. Are you getting me?
Yes, sir.
Even if you say you are not putting the 552, you shall put 184. When you get here, you put 500 different, because the examiner must see how did you get 167. You cannot just punch it on your calculator and fix it there. You must see it. How did you get 167? What did you use in doing your exchange rate? Are you with me?
Yes, sir.
So 1052 minus 990, that gives us what?
My second question, sir.
Go ahead.
Yes, why is it that we are only doing for summer? We are not doing for the other subsidiary.
Yes, this is
my question. Why are you in a rush?
Yeah.
One after the other.
It's a nice question.
Have I answered your question?
Is it not possible to do the table together at the same time?
No.
Only Soma has another currency.
Currency.
I don't know if I'm right.
Naira.
Hello, sir.
Hello, go ahead.
I think one I understand with this issue of this translation is that you need to identify the subsidiaries who are not using the parent company that's a currency. Then in that case, that's why we are doing only for the Soma before we go for the footer, because we need to translate all the currency to Naira.
Okay.
I don't know if I'm right.
Thanks for that. Anyway, you
Yeah,
have a valid point.
Yeah.
Some of us are doing as if we are not in this class. And the questionnaire of this question has always been in this class. Even when we're doing two subsidiaries that have the same currency, did we do it together on the same table?
No.
We did it separately.
Separately, yes.
So I don't know why.
But sir,
Just considering the hours that we are going to be giving the exam and how.
That's why the examiner gave you how many additional information?
Just two.
Yeah, we have 1, 2, 3. There's just two.
Major 2.